Welcome. In this video, we will analyze if Hbar coin can skyrocket upwards. Don't forget to subscribe, like, and please watch till the end to understand. The descending trend that has been effective for a long time in the chart had been putting noticeable pressure on the price movements. This downtrend was an important technical signal, showing that sellers were maintaining dominance in the market and buyers were not gaining enough strength. However, recently, we have seen a significant transition as the price approached this descending trend line and then broke it strongly. This breakout signals that the market may be searching for a new direction and could be the precursor to a trend reversal. In particular, momentum formed during trend breakouts is a crucial factor. Currently, the price has pulled back toward the broken trend line and entered a retest phase. The retest phase is a very important process in technical analysis to confirm trend reversals. This is because when the price tests a level that previously acted as resistance, now as support, it helps us determine whether the new uptrend is healthy. If the price can hold this area without falling below the broken trend line and receives a strong buying reaction from here, a very positive structure will form for the continuation of the uptrend. There are a few key factors to pay attention to during this process. First and foremost, the trading volume during the retest is of great importance. If the price is supported by high-volume buy orders while testing the broken trend line, it shows that buyers are entering the market strongly, and the uptrend will gain momentum. Additionally, the weakness of selling pressure during the retest is also a positive sign. If the price does not experience a sharp downward break from this area and encounters strong buying reactions, a more reliable structure for the uptrend will emerge. Furthermore, how the price completes the retest process is also very important. From a technical analysis perspective, a retest of a broken trend line is typically seen as a sign that the uptrend will continue. If the price confirms the broken trend line as support and holds this area, the start of a new uptrend is likely. In this case, the price may begin to make higher highs and transition into an uptrend. However, in the opposite scenario, if the price falls below the broken trend line and stays there, the bullish scenario may lose its validity, and the market could come under downward pressure again. Additionally, it would be useful to assess the price movements on larger time frames. If this breakout is supported not only in the short term, but also on larger time frames, the likelihood of a longer-term uptrend increases. For example, if this trend reversal is confirmed on 4-hour or daily charts, it can be said that the bullish scenario in the market is based on more solid foundations. Once the price completes this testing process, it will likely start to rise. However, it's important to note that just looking at trends is not enough. We need to monitor other metrics as well. Keep watching. The foundation of Elliott wave theory is based on the idea that market movements follow a specific pattern and consist of 5 main waves. The first 2 waves have been completed, and the price is now heading towards the third wave. This phase typically includes the largest and most powerful price movements, offering significant opportunities for investors. However, expectations for the third wave require much deeper attention and preparation in technical analysis. This wave typically determines the main direction of the trend and causes rapid price movements in the market. The completion of the first and second waves indicates the preparation for a major uptrend. These waves represent the correction and recovery phases before the price reaches the point of significant movement. Currently, the third wave is about to begin, and its momentum will show how strong the overall market direction is. The third wave typically starts with a very strong momentum, signaling the period when large investors enter the market, and buying pressure increases. The yellow and green lines, representing the minimum targets of the third wave, are key levels in technical analysis that the price is expected to reach. These levels act as crucial support and resistance areas for the healthy continuation of price movements. As the price moves towards these levels, it indicates that the uptrend could accelerate, and buying pressure in the market will increase. When the third wave begins in the market, typically much larger price movements are observed than in the first 2 waves. During this period, buyers dominate the market while selling pressure decreases, allowing the price to rise significantly. In technical analysis, such large price movements are often interpreted as strong buying signals. Investors who recognize these opportunities can participate in one of the highest profit periods in the market. While the third wave determines the overall market direction, another important factor for investors to watch is the strength of the momentum. If the price starts to rise rapidly once it enters this wave, investors will quickly realize the power and potential of this wave. This particularly creates buying opportunities because, once the third wave starts, the market's growth trend becomes very clear. This growth can sometimes manifest as sudden and significant price increases, offering large opportunities for early investors. The third wave can be sudden and very large, so it's important to be prepared. The breakdown of a downward trend in the RSI indicator is a significant development in technical analysis and can have a major impact on market dynamics. Typically, the RSI not only measures overbought or oversold conditions of an asset, but also reflects the momentum of price movements. Therefore, the break of a downward trend in the RSI serves as a clear signal that the market may break out of its current state and gain a stronger directional momentum. A downward trend may indicate that the market has weakened over a certain period and that sellers have been in control. However, breaking this trend signals that the selling pressure has diminished and buyers are starting to take control. Such a breakout often leads to a shift in the overall market sentiment and paves the way for an upward price movement. When buyers begin to assert themselves more strongly, prices can rise rapidly, creating an environment where potential profit opportunities arise for investors. Furthermore, the rise shown by the RSI as it breaks the downward trend can be a reassuring sign for investors. Since the RSI reflects price momentum, this kind of breakout may indicate that market energy is increasing and a potential upward move will continue. Investors can closely monitor these technical signals and focus on finding the right entry points. The rise in the RSI may increase investor confidence, allowing prices to move higher due to growing buying pressure. Additionally, when the RSI breaks its downward trend and starts to rise, it typically signals that the market is entering a healthier and more sustainable uptrend. Investors can strategically strengthen their positions by analyzing such developments and, with proper timing, can achieve greater returns. At this stage, market participants may view this uptrend as an opportunity, since RSI breakouts often signal the start of a strong move in the market's direction. Moreover, when the RSI breaks its downward trend and prices start to rise, it often presents a clear buying opportunity for investors. The rise in the RSI is generally a precursor to price increases. Therefore, investors track the market closely after the RSI breakout to determine whether momentum is picking up and adjust their positions accordingly. These types of breakouts often lead to large movements and high volatility, which increases the potential for short-term profits for investors. When the price moves above the 200 EMA, it is often seen by market participants as a strong sign of confidence. The 200 EMA is a crucial technical indicator that determines the long-term market trend, and being able to stay above this level signals that buyers have gained control and that the selling pressure is fading. Specifically, when the price breaks above this level and remains above it, many investors interpret this as the beginning of a potential bull market. This situation indicates that the market has technically established a strong support level, which could encourage more buying in the future. If the price continues to stay above the 200 EMA, the buying pressure in the short term could lead to further upward movement in the long term. This would allow buyers to enter the market with more confidence and focus on long-term investment strategies. Additionally, sustained movement above the 200 EMA demonstrates increased confidence in the market and shows that prices are gaining a more sustainable upward momentum. Moving above this level is important not only from a technical analysis perspective, but also from a market psychology standpoint. Investors typically watch how long the price stays above the 200 EMA, and during this time, more investors tend to enter the market. This leads to increased liquidity and buying power, which helps stabilize price movements and sets the stage for longer-term upward trends. When the market breaks above this level, it often signals the strong beginning of a bull market. Another important factor is that this sustained move above the 200 EMA reduces market volatility, allowing prices to move upward in a more controlled manner. This creates more predictable and sustainable profit opportunities for investors. Every moment the price stays above this level shows that confidence and participation are increasing in the market. Furthermore, the 200 EMA is considered a reliable indicator for tracking long-term trends in technical analysis. Therefore, investors can use the sustained move above the 200 EMA as an opportunity to evaluate potential upward movements in the price. For investors, staying above the 200 EMA generally creates an appetite for risk and makes long-term positions more attractive. Buyers can increase their potential profits as the price rises, while other investors can use this technical indicator to make safer investment decisions. This is why the 200 EMA is important. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.